Cisco is trading down sharply in the pre-market. Last night they reported fourth quarter earnings that beat consensus estimates slightly, but they announced a new jobs cut program, and their outlook, while it did include the consensus estimate, it was at the high end there. Stephanie, do you think the sell-off this morning is warranted, or were expectations just a little too high?
So the stock's up 34% year to date, one of the best technology stocks, and it's had such a nice rally since last quarter, their fiscal third quarter. And because this the fourth quarter is typically their seasonally strongest one, there are really high expectations. But it was a mixed quarter. I mean, there's some positives and there's some negatives. So there's stuff for the bulls and stuff for the bears. I would say this is absolutely a buying opportunity because the story long term does not change, and that is this company is focusing and transitioning away from switches and routers, which is more commodity-like businesses, into faster-growing businesses, security, software, services. Services was what was quite a highlight to me in the quarter, and so this transition in the quarter. It was confirmed that the strategy is working. It's just a very challenging macro at the current time.
Yeah, and I think the jobs cuts really spooked some investors. Yeah. And Chambers talked about the slow growth in the global macro environment. What does that tell us about the macro going forward?
Well, it was mixed. So by geography, the U.S. was strong. Europe was actually better than expected. Europe grew 6% versus falling in the first quarter and flat last quarter. So we've definitely seen progress in Europe. And Europe is mixed. I mean, he did go through a lot of the different geographies, but the point of it is it's actually recovering. The Asia-Pac region was the weakness. China has been a problem for this company for a while. It's 5% of sales. They are at a competitive disadvantage. They know it. They've been fixing it. That was not a surprise. What was a surprise was Japan down 13%, and that is because of capacity issues. Their customers are full on capacity. So if you believe, like we do, that Japan is gradually improving, then we see that this is an opportunity because we don't see that this decline will persist. So it's a very mixed geographic picture, but I would lean towards the positives because there's more positives than negatives.
Now, if you look at tech overall, the second quarter, this was their fiscal fourth quarter for Cisco. Right. It's been a mixed bag, really. So which subsectors do you think are better to own here?
Well, I do think what this company is doing in software services and security makes sense. I still like security, so I still like Symantec very much, and I think that's a buy if the stock gets hit. I still like some of the consumer tech, like a Facebook, like a Google if it were to pull back, and Apple is certainly showing signs of life. I think that depends on their product cycle and what they announce upcoming, and it's had a nice run, but I think you can kind of add to all of these positions, particularly when the market falls like it looks like it's going to today. I think you want to pick your spots, but Cisco is really doing a very good job in the transition, and there was enough positives for me to stick with it. It's 11 times forward estimates. They generated $4 billion in cash. They have $50 billion in cash. $10 billion here in the U.S. So there's a lot of flexibility that the company can still do in terms of making acquisitions and further increase its growth end markets.
Okay, well, there you have it. Let's buy Cisco on this pullback.
You can follow Jim Cramer and Stephanie Link's stock picks and strategy on actionalertsplus.com.